All right, back to work. Back to work. I missed you guys last night. Hope you guys had a fantastic day. A beautiful trading day today. Finally got that two-legged pullback we talked about a couple days ago. That was great this morning. Love seeing members making money with us in the morning trade. Hope you guys made some money as well. We got one more day left tomorrow. Got a big Friday session. We got 3 days until Thanksgiving. Next week, there are tons of ways to make money on Friday. And as always, I'm going to cover my favorite trades in the video tonight. I want you guys to have a game plan to make some more green on Friday. Now, before we jump in and get the party going tonight, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you like these lessons, if you enjoy these videos, do me a favor, will you? Hit that like button. Give me a shout out. Give me a hell yeah down in the comment section below. All kidding aside, though, thank you so much for tuning in. It's been a hell of a week this week, and we're not even done yet before Thanksgiving next week. Now, where are the best trades setting up for finally Friday? Let's start first, as always, on the 60-minute, the Nasdaq and the triple Qs. I got the Emini and the SPY. Remember, guys, I like to use the 60-minute charts to plan my trades for the following day. And then later on in the video, we'll drill down some tick charts. Tick charts make the entry timing a whole lot easier. So we'll start first on the bigger picture on the 60-minute, and we'll drill down and talk entry tactics, give you guys a good roadmap to find some good entries on the tick charts as we go deeper. What are the 60-minute charts telling us right now? There are really three big clues right now on the 60-minute. The first one is that real strong run higher we had going higher. We talked about this earlier on this week. Anytime we see a strong move like this, we expect a two-legged pullback and a retest of the high. We got that two-legged pullback this morning in the trade room. Now we're trying to go back up and retest those highs. And in these situations, no one knows exactly what will happen tomorrow. But in these situations where now we've got the two-legged pullback, usually bear traps are where the high percentage money is made in these situations. So we definitely have some bear traps, all kinds of bear traps we'll talk about in the video tonight. I got some bull traps, some reversals, some breakouts. I'm going to cover it all. I'll cover all the bases. That way you guys have a game plan no matter what happens on what might be a very good day tomorrow on Friday morning. Now, before we jump into the tick charts, before we talk about those bear traps and talk about how to make some money on Friday, why don't we double check the schedule for tomorrow? There's really one thing you want to be on the lookout for tomorrow. It's not the housing starts and permits at 8:30 Eastern time. There really isn't any major news tomorrow you got to worry about. The most important thing for tomorrow is tomorrow's a Friday. Now, Fridays usually get a bit lower volume. Liquidity dries up. Once we start getting 11:30, 12 o'clock, 12:30 Eastern time, mindset on a Friday is really important. My mindset on a Friday morning is get into trades as early as I can, remove risk, take a quick profit target, and leave a runner. I call it the Friday mindset. Again, Friday afternoons, they get low volume, they get illiquid. People make foolish decisions on Friday afternoons, so markets love to run into lunch, into Friday afternoon. So remember this mindset for every Friday, not just tomorrow Friday, but every Friday. Get into trades early, remove risk, take some profit, lock in some gains, but try to leave a runner, try to leave a little piece of that position open, because as you guys probably know already, Fridays, they love to run. That's the mindset for tomorrow. And we'll keep an eye out for any unexpected news headlines tomorrow in the trade room. Now back to our charts though, because the money is made on the charts. Why don't we go over now my favorite trades here? We'll go the S&P and SPY first. We'll wrap things up tonight on the Nasdaq and the triple Qs. These are pretty much identical markets right now, so a lot of the stuff is very interchangeable. As I mentioned in the introduction, we have really three kind of clues right now, right? A strong run higher. We got that two, you can't see it very well on this chart. We'll see in a second here on the tick charts. Strong move higher, big move higher says two-legged pullback and a retest of that high. We got the two-legged pullback. The buyers want to retest those highs. And usually in these situations, it's bear traps. Trap the bears in, use stops as fuel. That's usually where the easiest money is made in a situation like this. Let's now drill down to our tick charts, because the tick charts are pretty much what give you the entry tactics for tomorrow, right? So we know what the overall idea is. This is that big run up, right? There's that big top we're trying to go retest right now. The Nasdaq has it almost the exact same thing, which, by the way, too, if you're watching for the first time right now, that is a 7,000 tick chart, upper left-hand corner, and that is a 21 EMA, by far the most important tool we use every morning in our members trade room at 8 o'clock Eastern time. There are really two big clues on the tick charts right now. One we talked about earlier was that big, strong run higher. So we know that big, strong run higher, buyers are trying to go back up and retest that high. Once we get there, do we break out higher, or do we get a crown reversal to short off the high? We'll talk about that in a moment. The big clue, though, is this trading range, right? This trading range. We've been watching this range in the trade room for a couple days now. Ranges, as we talk about in our free video classes, ranges love to rotate. And so once we found this trading range, we projected the amount above the range down below the range, and we pretty much came in this morning and kind of knew that that was the hot spot here for this morning. Now we have this rotation off the low, we call it. Ranges love to rotate. And we have to think now, this momentum as it rotates off the low is going to try to complete an equal pendulum up around those highs, which of course takes out that big high overhead. I would also mention too, we talked about that two-legged pullback earlier on in the week. If you were here on Tuesday night, I wasn't here last night, unfortunately, we talked about how two-legged pullbacks are a measured move, right? That goes a little bit further, right? You saw how they held that measured move. Once they got those bear traps underneath that measured move, that's what everybody was waiting for. I got a bunch of emails this afternoon about that. So hopefully you guys made some money on those two-legged pullback. Remember, two-legged pullback, a little bit more than a measured move that lined up right around that beautiful pendulum swing. That was the kind of the easy one, almost a gimme this morning, late morning in the trade. A lot of members doing really well on that bear trap down there. So now we've got this rotation. Right? Now here's the trick though, right? Here's the tough part. Now as we go higher, we have to think, who's waiting up here? Bears, right? We have to assume that sellers are waiting up here. And so really the way you make money on these is you trade bear traps, or we trap in the bears to finish off that move going higher. Now there are really in all reality, there are three ways to trade this going higher. There's one really easy way to trade it going lower. Later on in the video, I'm going to talk about if we end up going lower. In all reality, that might be where the best bear traps and the biggest profitable trades are waiting. I'm going to cover that a bit later. Don't sleep on that move going lower, because we had that big move up in the 60-minute. I'll talk about bear traps. There are probably three different ways to use bear traps down at that low. I'm going to cover that in a moment. There are three different scenarios. Remember, nobody knows what's going to happen tomorrow. Let's put together a game plan that way you guys have a roadmap no matter what we get. So one scenario is we could easily be a fake out breakout back down into that range. Okay, there's two very easy patterns, setups I'm tracking to short off of that high. Then on the breakouts, there are two types of breakout patterns I want you guys to be aware of. One's a pop and grind breakout. The other's called a breakout pullback. We'll talk about that here in a moment. Let's talk about as the market goes higher here. All right, as the market goes higher, I mentioned earlier we have to assume there are sellers waiting above all of these highs. So if I want to be a buyer on the way up to retest the high where everybody wants to get to right now, I have to use what's called a bear trap to basically trap the sellers in, get them to sell short, so I can ultimately use their stops to fuel this move to finish off that move. Right? Whenever I'm worried about buying high, which is basically what we're doing up here, right? You're buying pretty high. Whenever you're worried about buying relatively high, I want to look for that bear trap. Now, we teach this in the free video course, right? It's very simple. It's a higher high in price and a little trap, we call that, right below that low. So keep an eye on this pattern as we go higher. It could be here, it could be here, it could be anywhere as it runs higher. Bear traps on the way up and bear traps on a breakout. Now, as I mentioned earlier, we may go up, we may take out that pendulum, and we may crash right back down in. So keep an eye out for these two types of patterns. One is called a crown reversal. It's very simple. Buyers try once to keep it going higher. We go lower. Buyers try twice to keep it higher. We bull trap above that high. This is called a crown reversal. It's very similar to a bear trap. It's a lower low in price and a trap above that high. I probably have 100 examples of that setup inside of our free video classes, right? So hopefully you guys have seen that inside the video course. That is a crown reversal to sell off the high. Now, what happens oftentimes in these situations is once it drops back down, we then start seeing bull traps as we go lower, right? We talk about these a lot in the video classes, right? When we rotate back and forth like this, we're always looking for trap patterns. I mentioned earlier, these situations, the good money is usually made with trap setups. So again, as we're going higher, it's bear traps on the way up. As we take out these highs, if we start seeing those buyers start to struggle, they try once, they try twice, we get that lower low in price, that's called a crown reversal. Nice strong red signal candle, close below moving average for that short. If it begins to roll lower, where does it want to go? Remember, ranges love to rotate. It'll want to take out that low on the other side of the range. As it drops, don't chase it. Don't chase it. Lower low in price, sell as high as we can. All right? That is the fake out breakout. That's kind of the bull trap reversal off of that high. And if you're watching for the first time right now, I realize this all might be brand new to you here tonight. I know most of you guys and gals have taken my free video classes. You've learned all about traps and failures and my favorite way to use stops to fuel easy winning trades. But if you're watching for the first time right now, this might be brand new to you. Not to worry. I teach all this. I have hundreds of examples of these in our free video course. I'll put a link up here quickly for you, upper right-hand corner. I want you to learn this strategy because the strategy you'll learn in our free trading classes will teach you a simple trick we use in our morning trade room to know exactly where the best winning trades are going to be each day. And more importantly, I'll teach you 4 of my favorite entry patterns. Definitely lots of crown reversals, definitely lots of bull traps and bear traps to help you start making money on your own. I'll tell you right now, the markets are way too good not to be making consistent money right now. If you're missing too many good trades, hit that link up there that popped up there. Take that free video course, hundreds of examples of these setups. Perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab that link that popped up there, I'll put all the important links in the description of the YouTube video, the free class links, the trade room membership links. And if you're on Twitter, I post a lot of updates during the day on Twitter. My Twitter feed down there for you as well. Give me a follow there and you'll see the updates throughout the day as well. So you guys will love that free video course. Let's talk about 2 breakout patterns, right? There are 2 basic breakout patterns you want to look for. In these scenarios where we're rotating off the low of this range, we oftentimes get what's called a pop and grind. So for example, as we go higher, I'm going to keep an eye out for buyers struggling for that short back down. But in many times like this, with all that bullish momentum, we may pop up and begin to grind and grind and grind, right? It may simply keep on going. Now, you know me, I'm not a big fan of picking tops in a bull market, right? That's why I don't simply short that top. I wait for it to pull back and I wait for the buyers to fail a couple times and then short into their stops once those buyers are locked in. So if we pop up and we start grinding higher here, this is a very, very easy one. All you do is you draw a trend line off these highs, right? You pin it down around that low and you wait for a pullback. What I do is I look left and I find prior swings. We talk about this a lot in the free video course, right? We find prior swings. Swings are where usually the best entries are going to be. This will get us underneath the moving average. It could be a bear trap underneath a prior swing. It could be underneath the moving average. Get the bears coming in looking for a short off the moving average. Remember, if we pop and grind like that, overall bull market, there's a very good chance we make our way back up and retest that high. I want to find that. I want to find that bear trap or that seller failure pattern below the moving average and failure into pullback combination for a retest of that high. And then also, too, remember, when it comes to pop and grinds like this, the amount of the move above the range or the amount of the breakout is the amount of that target. All right. So again, if we start to pop up and grind, I'm going to grab that trend line, mark that high, mark that low, look left, find those prior swings, and I'll use any of those 4 entry patterns you guys are learning in the free video course off the low of that channel. And again, targets are easy on these. The size of that pop leg, that's your measuring leg, get anchored off that low. That will give you an idea of where the target is overhead. That is the first of 2 different types of breakout patterns. The other one is a breakout pullback. So breakout pullbacks are pretty simple. If we begin to really rip higher, right? If the market really races higher, what will happen is all of these levels of resistance now will now get flipped basically into levels of support. And we look for that breakout, that pullback, and a retest of that high. Now, as you can imagine, this type of breakout in this environment where you have that big high overhead, it needs to be very, very convincing. So it will require a pretty good squeeze going higher. Remember though, if we do spike up and run higher here, what's the pattern? On the way up, it's always those bear traps, right? Trap the bears in. We have to use those stops as fuel. So as it rips higher in that situation, obviously I can't go over everything right tonight, but look for those bear traps as we're going higher. What I will usually do in these cases is if we do race higher, right? If we race higher here and spit up higher, what I'll do is I'll go out, look left, find a larger channel like that. Look left, find these prior highs, right? That can now be used as areas of support. Makes sense, right? What is resistance becomes support. And then if you're really good, you'll grab a crown reversal, 1, 2, that crown reversal pattern a bit earlier into that pullback. And then once we get down around that, again, around that channel, right around that previous high, then we start looking for that kind of classic failure into pullback combination as we're going higher. And again, I apologize. I'm obviously kind of drawing right now on the screen. The key is understanding the fundamental ideas behind this. You guys will learn the actual entry techniques right in the free video course. The most important thing though is as we go higher, if we struggle, grab that crown reversal off the high, right? If we pop and grind, it's simple. Find that new channel, right? Grab that first test and the retest of that high, right? And if it really, really, really rips running higher, we now look left. We start finding these prior resistance levels. We flip this now into support. We go out, and what I usually do is grab that bigger channel, right? That bigger channel, and then think about where I can line up that channel, right, along with that prior high. And that's usually where the sweet spot is on that pullback. And again, if we're lucky, we'll go up, run into some overhead resistance, get one of those crown reversal patterns, those 1 try, 2 try, remember lower low in price, right? And that trap high during that pullback. And then once we drop, we get underneath that 21 moving average. Remember all that strength for the buyers, overall bull market, very likely that gets bought up. I'm not someone who likes to pick the bottom, right? Picking tops and bottoms is always difficult. What I'd rather do is get underneath that 21 moving average and get some bears coming in and try to short that move. Once they short, now you know exactly where their pain is, right? Now you know exactly where stops are. Now you can run those stops and run back up to retest that high, right? So keep an eye on that breakout pullback, okay? Those are 3 different scenarios. Again, 3 different strategies I'm watching as we go higher. Because again, nobody knows what's going to happen for tomorrow, but now you're ready with 3 different game plans if we do end up punching and running higher. Now here's the big question, right? Here's the big question. How do we short this market if it drops back down? How do we buy down here? How do we buy down here, right? That could be one of the best trades of the week this week. Let's go look at the NASDAQ here now. The NASDAQ, of course, is very similar. I don't want to leave the NASDAQ lonely here the entire video. On the 60-minute chart, on the NQ, big, strong run up, 2-legged pullback off the high. You can't see it very well on this chart. We got that in the tick chart today, though. And now we're trying to go back to retest the high, right? As we go back up to retest the high, the name of the game is to trap in sellers, use their stops to fuel the move to finish off that retest, otherwise called bear traps, right? That's usually where the most high percentage money is made in these scenarios. Now, look at this NASDAQ tick chart right now. Get that out of the way here for now. There's that strong run up, right? There's that strong run up. The buyers have one thing on their radar, right? They took out that new spike measured move. We talked about that this week in the video. They get that strong run up, and just a gorgeous example today. We mentioned on the S&P, a gorgeous example there. There's that two-legged pullback. And again, right, we're not buying the measured move like I mentioned on Tuesday night. We want to get underneath, right, a little bit further than that measured move. And again, just teed this thing right up for that run going higher there. Pretty easy game plan if you watched the video a couple days ago. Now we have basically a bear market right now, short term, right, bearish into a range, and now we're rotating off the low. Right? We have the amount we go below the range, the amount we go above the range. So you have to think right now, even more so on the NASDAQ right now, the bears have to be waiting around all these levels, right? Get all that short-term momentum right now. We're still pretty bullish overall, right? That hasn't changed. But this is a great example of where bear traps are so important right now, because as we go higher, you have to think that bears are waiting up there to whack this thing back down, right? So as we go higher here, remember, the buyers want one thing. They want to go take out that high, right? So as we're going higher, and this will be a little bit of repeating off that previous lesson in the S&P, I'm going to cover the move going lower in a moment. But just so you know how to handle this on the NASDAQ, as we go higher, I don't want to buy high. If I do buy high, I have to rope in those sellers once, sellers twice, and keep using those bear traps to buy it going higher. Now, one thing I failed to mention on the S&P is, we might end up running up and get knocked back down again. Right? It could easily get knocked back down off the top of that channel. If that's the case, again, we still know where the market wants to go. It wants to take out those highs. So if we get knocked back down again, we may stumble lower. Bears try once, bears try twice. Remember, think about that same pattern. Okay, it doesn't matter how you use it on the way higher, but as we're trying to go higher right now, whether it goes up, bears once, bears twice, it's the same idea. It's a higher high in price and a trap below that low, right? So again, this will also apply to the S&P as well. I should have mentioned earlier in the video. So as we're going higher, it's a higher high in price, a trap below that low. If it gets whacked off that high, right? It's still a bull market overall. It gets whacked off that high, stumbles lower, right? Bears want to keep it going lower, right? Bears once, bears twice. That could be a fantastic way to use a bear trap on the way back up to retest the high, all right? So bear traps are the name of the game as we try to go back up and retest. And as I mentioned earlier, we may easily run right into that channel, right? Buyers may foolishly come in and buy this, right? Remember, I want to buy up here by trapping in the sellers. But if I run into that channel, into that overhead resistance, and I start seeing buyers try once, lower low, twice, right? Remember, big difference between up, higher high in price, right? Big difference there. That is a bear trap right there. It's a higher high in price and a trap low. That is not the same scenario as over here, right? If I run up and the buyers try once, remember, buyers want to buy low. Buyers want to buy low. They go lower, they try again. There's that lower low in price. There's that bull trap. There's that crown reversal pattern off of that high. We talked about this earlier on the S&P. And again, the minute this thing starts to drop like this, if we start seeing those lower lows in price, we keep hunting for those bull traps, right? This is the same thing I talked about on the S&P a moment ago. I just want to make sure I reinforce this here because I know a lot of you guys for the NASDAQ as well. All right, guys? So just be aware of that key difference as we try to make that run back up between a bear trap you can buy and a bull trap, crown reversal, right? Or a bull trap as it rolls back down again. All right? Now let's talk about the move going lower. We have a very big move up right now on the 60-minute. On the S&P and the NASDAQ. So we have to assume that as we go lower, there's buyers are going to be waiting down here. The good news is that if we do roll over, this will feel very, very bearish. That is good for us as buyers because we'll probably trap in a bunch of rookies who think this thing is reversing. The bottom line is, with a move up that big, any pullback we see right now will likely get bought up. The trick is not trying to pick the bottom on this. So as we go lower, we talk a lot about what we call double bottom reversals, right? In these videos, double bottom reversal, right? A V bottom reversal. Lots of ways we can trade this. If we roll over and go lower, I'm not a big fan of picking bottoms. What I'd rather do is see if I can get some rookies to come in, let them try a couple times, and use their stops to fuel that move going higher. It ultimately, because of that trading range, it's the same idea. It's a failure around the edge. This is basically a failure pattern I'm drawing right now, right? A failure around the edge, a two-try failure, because it'll be pretty bearish when it goes lower, right? Bears once, bears twice, use their stops to fuel the move going higher. And then what's the one pattern we use during range rotation? It's always going to be a trap. So a bear trap as it runs higher. Okay, this is the basic fundamentals of how I want to buy as it goes lower. I don't pick the bottom, I trap the sellers in, I squeeze their stops to fuel that move going higher. Once it starts to run higher, and we know we're looking now for that rotation off the high, we know where they want to go, ultimately back to that big high up there, and as we're doing it, it's that higher high in price and that trap. It's failure at the low and bear traps as it rotates higher. Now, there's a bunch of different variations this may give us. For example, we may see a strong run down. They may pull back and retest that low. If that happens, even better, because now anyone who sold that pullback will likely take their profit at the retest of that low. Now trap the rookies in. Bears once, bears twice, 1, 2. Why 2 tries? Because we're so bearish in the short term. I realize we're bullish overall, but I'm a day trader. Short-term momentum is so important. You can be right about location, but if you don't respect momentum, you're going to get run over. So this is why I use what we call the 2-try rule. When I'm trying to pick a bottom in a long-term bull market, but very bearish in the short term, it can be difficult to find that bottom. So I look to time the entry with the bears trying a couple times so I can use their stops to fuel. Again, it may run lower, it may pull back and retest that low. I still want to be a buyer down here. Now again, we trap those bears in, we run those stops. Remember, failure at the low. As it rolls higher, what is it again? It's a trap pattern. I'm sure you guys are sick and tired of me hearing say the word trap tonight, but that is where a lot of the easy money is made in these situations. Higher high in price and that trap below that low. 2-try failure, right? Bear trap as it rolls. Where's it going? It wants to take out these highs up overhead. And again, leave a runner on Friday because they love. This could easily trigger late in the morning on Friday, right? And leave that runner Friday afternoon could easily be one of your biggest winners of the week. One last variation of this that I want to go over here is the V bottom. For example, sometimes what happens is sometimes these strong runs down and it just bounces off those lows, right? You know, I would love to get that roll lower and 1, 2, right? But maybe we won't get it. If that happens, remember that risk reward equation I gave you guys a couple nights ago? If it bounces hard, you want to use that 2-try pattern again, but you want to try to buy as low as you can. All right? Remember, there's a very big difference between run lower, bears once, bears twice off the moving average. If I do it this way, I get a pretty darn good risk to reward on that trade, right? Makes sense? Okay. But if I go like this and we bounce real hard and then bears once, bears twice, right? If I buy up here now, my risk, right? Look at this. My risk is here. My reward is here. Okay, we don't like that risk reward. So in those situations, what you do is you don't buy high like that. You wait for that bear trap and you get in nice and low. Now what is your risk reward ratio? Now what's your risk profile? Risk, right? Reward. Okay, lots of people will wait for that for that entry tactic. That makes sense? If you understand that simple part of this, you are a mile ahead of your competition. It took me years to learn what I just taught you guys in a couple seconds here. All right, is that making sense? Right? Give me a hashtag light bulb in the comment section below if that helps you out, or if you've been making that mistake as well. All right, so those two variations are how you want to think about buying off of that low. Right? I call these V bottom reversals. Right? Sometimes it runs and we go 1, 2 back up. up, those are the easy ones. Sometimes it really bounces hard, and those are the ones that are tricky because it makes you get underneath that low. Oftentimes we'll go out and find a channel off that high, off that low, right? And that will give us into that bear trap to make sure our risk and reward is balanced there. All right? Now the game plan is all set for tomorrow. Remember, nobody knows what happens tomorrow morning. We put together game plans that no matter what happens, we are prepared to make money and not make mental mistakes. The best place to be though tomorrow is with us tomorrow morning in our trade room. I can't think of any better way to learn to trade than to come out, ask a bunch of questions, trade along with us. I have so many students right now making money with us in the morning trade room. Hopefully I'll see you sometime soon with us. I'll put all of the free video course links. I'll put my Twitter feed links, my trade membership links down the description of the video. Hit those links up and I'll see you sometime soon in the morning trade room. I would definitely recommend though, start with that free video course first. Learn the basic strategy, get warmed up and get ready for our members trade room in the morning. If you got any questions or have trouble getting access to our video classes, I'm always here, so don't be afraid to call the office or use live chat as well. We're always here to help out every step of the process, so don't be a stranger. All right, guys? Well, what a week it has been. We got one more day left. We got pretty much 3 days left until Thanksgiving. Got a lot of good stuff to look forward to the next couple trading days. So good luck tomorrow. Hopefully I'll see you sometime soon in the morning trade room with all the members. In the meantime, be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.